We're live, folks. Hope everyone is having an awesome week. Lots of news to tune into today and lots of exciting topics to cover. I'll just wait a moment as you guys start getting your notifications and hopping online and got all my news articles ready for us to go through. Yeah. Once you're online, just so I can see you, just drop a comment, smash up the like, just so I can see that we're all good and well. You can see there's a few viewers. Yeah, just wait a moment before I start pulling out my articles and having a good chat about what's happening in the world economy. I'll start with a boring one, which is interesting anyway, whilst you're getting online. For those of you that don't know, hey Matt, hope you're doing well. Grays Online, you know, that bidding site, the car site, the auction house, buy all your machinery, whatever. It's gone into liquidation. And you might be thinking, how could Grays Online go into liquidation? It's been a company now for about 50 years or 60 years. And a few years ago, it got sold out to a private equity firm. So just doing a little bit of research here. It looks to me, we'll read through the articles. If you're just tuning in now, it says, new owner put Grays Auctions into administration in a strategic move. Slattery Auctions has placed Grays in voluntary administration after acquiring the online auction house earlier this week. A move it describes as a long-term strategic approach. The new owner said the administration process is to manage some legacy issues, adding that it will not affect day-to-day operations, staff or the client experience. As a part of the process, advisor and restructuring firm McGrath-Nicol has been appointed as administrator. Move comes after Slattery Auctions completed acquisitions from Quadrant earlier this week. The independent family-run business said it has become the country's largest auction house by user base and one of the top three by revenue following the deal. The AFR previously reported Quadrant had made several attempts to sell Grays, which was sitting on a $10 million worth of debt. The sale took place 6 years after it acquired the controlling stake in the company. Founded in 1922, so it's actually 105 years old, Grays Auctions. Is Australia's premium auction and e-commerce platform specialised in industrial, automotive and commercial products. Meanwhile, Slattery Auctions was established in the year 2000, is now owned and managed by brothers Paddy, Tim and James. Slattery has 150 employees, 10 locations across Australia. With the acquisition of Grays, will now expand to 450 employees and an additional 12 locations. Following the acquisition, Slattery will operate as a business of two brands, those whose offerings complement each other. So we go into why it all collapsed, right? And it says here, the decision to liquidate Grays Online, as revealed by the news, highlights Grays Online financial issues. Grays describes itself as Australia's largest industrial, auto and commercial e-commerce business, having originally commenced in 1922. In July 2025, the federal court issued a $10 million fine for Grays Online and ordered the organisation to compensate hundreds of buyers misled by deceptive advertising. The court found that between July 20 and 22, the company misrepresented to make model features of 750 vehicles. The administration potentially affects $115 million owed by Grays Online former owner Quadrant Private Equity to Westpac Bank. The confirmation of administration proceedings was confirmed on October the 3rd. Anyway, so it looks like Sam said keep increasing the hooks in the ocean. Exactly. Grays Online got into liquidation. What they've done is it looked like it was riddled with debt of about $100 million worth of debt. And what they've done is that they've put into administration, and then the new company that bought back all the infrastructure it wanted for $2 million. So it in essence sold for $2 million to its new owner, which is quite interesting. Anyway, just goes to show 103 years in business and it's gone into liquidation. Why did it get into liquidation? It was a family-run business, went to a private equity firm, turned into a Ponzi scheme, got lots of debt attached to it, grew very big, and the debt is what ate the business. And on the back of that, we just look at debt, right? We've got the orange man here, Breaking news, Trump says a $20 trillion deal could be injected into the US economy by the end of 2025. Rate cut in December, quantitative tightening finally ending, QE starting soon, and now this. So this is from Fox News. Trump investment in America could total $20 trillion by the end of this year. And you just got to think, where's this $20 trillion coming from? Is the governments around the world turning into the greys online, taking out absorbent amounts of debt, with that debt not being able to service it, having to take on new debt to pay the old debt, restructure debt to pay for debt. It's interesting the news that's coming out from this bloke, which is just an actor, just been placed there through selection, and the hands at play at the back end of it. So, the next article here, game changer, Trump's 50-year mortgage plan. 50-year mortgage, folks, 50 years. I remember seeing a lot of you guys in the comment section over time saying, will Australia see a 40-year mortgage? And it's quite interesting to read through the articles and to understand the history of where the 30-year mortgage came from. So I'm going to read, this is off like news.com or one of the major news sites. The Trump administration is proposing a radical change to mortgages that has left many stunned and fearing for the future. The Trump administration is proposing a huge change to mortgages in order to lower monthly payments. Donald Trump shared an image of himself next to an image of former President Franklin D. Roosevelt on his Truth Social page under the heading Great American Presidents, writing 30-year mortgage above Roosevelt's image and 50-year mortgage above his. Just remembering, it was only 6 years ago or whatever, this bloke was voted in and he said, I'm going to get the debt to zero. I'm going to make America great again, right? But what he's done is he signed the souls of everyone up to a mortgage. And a mortgage, if you go back to history and look at Latin, stands for death contract. So you're signing up a contract for the rest of your life. And if you're signing up a 50-year contract, he's just enslaving you even more. And everyone will wear their red and white hat, piss off the blue head people, and, chant how great he is without realizing how far the system's being sold down the river. Federal Housing Finance Agency Director Bill Pulte later took on X to confirm the US government's plans to introduce a 50-year mortgage for the first home for home buyers. Thanks to President Trump, we're indeed working towards a 50-year mortgage, a complete game changer. Oh, you could imagine it like a complete game changer, but my hands are too big for Trump, Anyway, why do you have to be like that, Trump roast fans? Anyway. So it's interesting. What I find is interesting is that Roosevelt in I don't even know when it was. Maybe someone could do a little search while we're doing this. When did Roosevelt introduce the 30-year mortgage, right? That'd be an interesting date to go and check. I'll check it on my phone while we're chatting. But I find it interesting, right? Like whatever comes in to America, they say if the US catches sneezes, Australia catches a cold, right? I've had a cold this week, got a bit of a blocked sinus, but I didn't catch anything from America. President Roosevelt, when did he come in? He was the 32nd president, and he was in he lived from 1882 to 12th of April 1945, and he introduced this, and guess what year it would have been? Let's have a good look at this, because I think the year is a very interesting year. Sam says here 1934. I actually thought it was 1933. Yeah, I'm just double checking it here up. Yeah, it was 33. It's kind of interesting that there's a 33 there in 19, when they did 30 mortgage. So, reality of it is that I think it might say in this article somewhere, um, you change the mortgage, right? You change the mortgage from 30 years to 50 years. Will it come here? 100%. If that goes in over there, that'll come over here. What would happen to the mortgage, right? People will go, oh, he made my repayment going down from 3 grand down to 2 grand. I can't believe how great this guy is. But the system can now support for it to go back to 3 grand, right? But when it goes back to 3 grand, it means the property price has gone up by 50%. So, what we will see off the back of a 50-year mortgage is the Ponzi scheme will keep getting Ponzi'd bigger, right? And people, why do you buy a house for? Oh, I want to own it. You own nothing, folks. You own nothing. You own absolutely nothing from it, right? Um, so you think you own the property even if you have no debt on it, but you don't pay the council rates, you don't pay the extortion taxes or whatever. They will come and take your asset from you. So you get the chance to rent the property. It doesn't say it in the game of Monopoly like I've got up there. It just shows that you can buy the things, right? But we're purely renting everything from this system. So a 50-year mortgage really makes it worse to own a property and pay it off over 50 years than what it would be to rent that property for the balance of your life. So yeah, just a very interesting time. And comment there from Sam. For investors already in the market, it will rocket serviceability and cash flow as a whole. So it will make the great divide for the people who are smart, the astute investors, which I guess, have the assets. All the suckers will come in, all the fresh people into the market will create further debt into that system. And it doesn't mean that you need someone to borrow money for your house. If all the people in the area, if there's 20, let's say you've got a suburb with 2,000 people and there's only 20 properties for sale, all it takes is for 20 people to come and buy property, or 50 people to come and buy those 20 properties to great demand and lift the price up by a new level. Then there's all the people that have the ability to access liquidity who has lifted the base value of that asset pool in value. And this Ponzi, people think, oh, property market will crash, the property bubble will crash. This Ponzi is way too big than all of us, right? It's bigger than us. So, people can sit there and not participate, or you can go, okay, thank you to all these actors for signing documents for the rest of the world and going along to create this table for us to be able to play this game out. And this is a very exciting and interesting game that we have, because who would have thought a 50-year mortgage would be something brought into the system? And it's just like a exciting, great, we're going to enslave you for 50 years, right? Instead of 30. He's literally, this is the guy's propaganda. I'm not saying I like Trump. I'm not saying I don't like Trump. I'm just saying that this is the avatar that's been placed here, right? Could have been, Sleepy Joe or whatever, right? But that's what he's touting himself as a hero, that this guy signed everyone up for a 30-year prison sentence, and this guy's now signed everyone up for a 50-year prison sentence, and everyone's so excited at the fact they've got the opportunity to be enslaved by it, right? No one's asking questions like, why is the system so broken? How did we end up like this, right? It's just insane. So I said a few years ago, we've got $20 trillion worth of debt in the US. We've got $24 trillion, $25 trillion, $30 trillion, $33 trillion, $37 trillion. We're now talking about here, Wall Street rattled as US national debt passes $58 trillion, right? Trump is going to have to take a $20 trillion loan to get the government cranking again, right? And to keep that Ponzi going back in. So, US and European stocks. So, when let's say there's 35 trillion, $38 trillion today in debt in the US, they decide to raise the ceiling, give more cash. That's going to go to pay servicing the debt and whatnot. Everyone else in the system says, I don't want cash because I don't value cash, right? I want other things. I want to keep my asset. I don't want the cash. So you need to go and get more um, cash to get the asset, which causes more debt to go into the system, which causes more liquidity in the system, which devalues the currency even greater. This is a hyperinflation, folks. This is a hyperinflation. Um, Here we go. US and European stocks slumped heavily overnight as concerns grow about the staggering new level of debt in America and skyrocketing layoffs. American companies slashed more than 150,000 jobs last month. So imagine you have a year, 150,000 jobs. If you times that by 12 months in a year, that'd be 1.8 million jobs. That'd be like the size of fucking, I don't know, Queensland, Brisbane, right, being chopped from their jobs. Would be like cutting Western Australian jobs out of the market and saying, "Oh, we just got rid of them today." Um, that is, crazy. It's the biggest October total in more than 2 decades. So the last time that the the jobless rate or the companies slash jobs at this rate was the early 2000s. Right? Let's just let that sink in. And we haven't even seen them go, hey, we're in a recession. We haven't seen metal birds flying through the sky allegedly. We haven't seen, different things. I haven't seen the blood on the streets, right? It's very interesting. This is the depression that I talked about, 2017, 2018, maybe a little bit early to the table. And the only way off this is to print their way through it. And to print their way through it, they didn't even get a chance of making that happen last cycle without causing stupid levels of inflation. The next cycle, we're going to see hyperinflation. It's amazing. Goes on to say the US debt has just passed the $38 trillion that they've got on their books. My little chart here didn't print out well enough. It's got bits and pieces of photos of, these actors that they put on. So we'll leave that aside. The next one, I'll touch on this one. This one here is off the back of it. We're in the US again, right? The Fed cuts rates again, but Powell raises doubts about easing at the next meeting. So we've got this dude. He kind of looks like Mr. Potato Head when you think about it, if you put hair on the Potato Head dude. Federal Reserve on Wednesday approved its second straight rate cut. Through Chair Jerome Powell rattled markets when he threw doubt on whether another reduction is coming in December. By a 10-2 vote, the central bank's Federal Open Market Committee, FOMC, lowered its bench overnight borrowing rate to a range of 3.75 to 4%. In addition to the rate move, the Fed announced that it would be ending the reduction of its asset purchases. So these words are very important, right? So quantitative easing is when they start buying up assets to support the market and push the value up. When they go into quantitative tightening, they don't stop buying assets, right? And what are assets? The assets could be state-owned, government-owned, federal-owned assets. They could be bonds, which is debt, basically. So over the last 3 years, the debt buying from the central banks, they haven't been buying as much debt, which has pushed pressure onto those interest rates. When they stop buying so much debt, when they stop buying so much debt, means they're going to buy more debt. That means that when the auction comes up for the bonds, they're going to be sitting there buying everything, which means that there's more liquidity coming in. So it changes the market from quantitative tightening to quantitative easing. Quantitative easing happened in 2020. Quantitative easing happened in 2021. quantitative easing happened in 2022 and stopped about midway 2022, and we've seen quantitative tightening ever since. So when you see a reversal of monetary policy, because the policy is showing that they're going to tighten the market, but when it goes from a tightening cycle to an easing cycle, that's when inflation always runs through. So he said it in the meeting. Let's read through the words carefully here. And maybe someone could snapshot this for the future. Maybe someone could remember this post from whatever date it is today, the 11th of November, 11th of 11th, 25. I said that we've turned from tightening to easing, which would mean more inflation, right? So they're going to buy more bonds, which means that they're going to print more money and they're going to buy that bond on behalf of the government, whoever needs it, the governments around the world, and it'll create more liquidity in the system. Very interesting time. So some governor, again cast dissenting vote, preferred the Fed move more quickly with a half-point cut. They're pushing for further rate cuts, so they're going to have to push for rate cuts to get this liquidity out, this money printing. When the US changes its policy, US dollar goes down in value, and other dollars go up, and other currencies are based in US dollar, like what we're buying, oil, everything's traded in US dollar. So if it becomes too expensive, we need to weaken our dollar as well, which, ultimately means we're going to start printing more money and lowering our cash rate as well, and the price of our bonds. So that's pretty cool, especially nowadays my mortgages are bonds. They're not a mortgage per se, they're a bond. So every month those bonds roll over and I get to reset the margin on them, and whatever the rate's going to is whatever it is, which is cool. My last article before we get into discussion of today. There we go. Lisa says, they said today rate increase in May. Let's wait until May. They won't be raising rates because I remember in February 2019, what was his name? Before what's his name? Bruce Genevieve took over. There was Philip Lowe. Philip Lowe from the RBA said that the next rate cycle move in February 2019 would be up, and in June in 2019 it went down, and quite ironic what they say and what they do. They also said that that in 2022 they said the next rate increase would occur in 2024, right? 2025, and in 2024, 2025 they lowered the rates because they'd pushed them up way too high. So it's kind of funny. This one here, very, very important. Aussie banks smashed by new first home buyer scheme. We've got this sleazy, Albo Sleazy here, reporting on what, I don't know what the photo he's talking about. Mortgage brokers have revealed wait times for home loan pre-approvals has blown out among major banks as first home buyers flock to the market. There has been unprecedented demand for brokers on the back of federal government's first home buyer scam, which came into effect on October 1. It allows for first home buyers to avoid paying lenders mortgage insurance on deposits as low as 5% instead of 20%, increasing their borrowing power. This sounds alarms for young buyers. Albanese has heralded the move as unlocking the housing market for younger Australians, but industry figures have warned inflated prices and other flow-on effects. All that we're doing is creating a bigger and bigger Ponzi scheme for the people that are coming in to buy in the market now. And they'll say it was the baby boomers, it was too much smashed avo, and certain different things, but they won't sit there and say, hey, it was the fact that we printed too much cash, cheap, easy credit, and that we robbed all the Australians or everyone around the world of their savings. It's not even this poor, I'll get the photo up again, this poor soul, it's not even his fault, right? Everyone's going to have a pitchfork for this guy sometime in the future, right? And he seems like a harmless dude, but I say that with a bit of funniness, right? He seems like a harmless guy. It's not his decision. He doesn't have the power to control that. It's the central banks and their flow of policy, whether it's tightening or expanding the currency supply, that's causing this to flow on, which is very interesting. The painful part, I'm going to get onto the topic of discussion tonight. Um, don't fear the market, use it, which is the discussion of today. Um, I feel like there's nothing negative to say out there, right? It's all positive. Prices are rising and things are good. Interest rates coming down, whatever. That's the scariest part because people think it's nice. I've said it so many times. You have an earthquake, the water gets sucked out to sea, and you're like, oh wow, I can see so much of the beach. I can see a shark flapping around on the water here, right? You don't expect, because the water's going out, that a tsunami's going to come back and wipe you. But before the water can come in and hit you, it doesn't just go bang and hit you. It comes out with force and fucking annihilates you, right? And that is the situation. People, yeah, may be happy right now, but it's the time to be fearful for a lot of people. Um, Fearful in what way? A price is going to collapse? No. They could. Anything could happen. But the information is not showing that that's going to be the case. The information is showing that we're going to end in a depression, but it's going to be a hyperinflationary depression, like something we've never experienced beforehand. There's been lots of nations that have experienced it. Just go and speak to anyone from Venezuela, Zimbabwe, Argentina, Hungary, thousands of different nations that have, or different currencies that have all been, wiped out with a high level of inflation. So, I'm seeing a couple of comments here. $10, 10 kilo bag of potatoes are now $30. It's a fucking bag of potatoes, man. That's crazy. The Big Mac being $30 by 2030. I don't even know what they sell for now, right? But what I do see is just things that I would normally, touch and purchase or consume, and the value of them rising, and nothing is staying. Like, if you can buy anything that is indexed or hiding behind inflation and not being inflated away, you should take advantage of those opportunities right now. And there's very few things out there that are cheaper than what they were 5 years ago. I like finding properties that are cheaper than what they were 5 years ago, and properties that were cheaper than what they are 10 years ago. And they're definitely there, but it is becoming harder and harder to obtain. I think that there's going to be a lot of pandemonium in the not too distant future. What I'm seeing is there's some markets in the country which are in like the $2 to $4 million price range. Like, I'm talking Sydney properties that are like Sydney properties. Sorry, I just see emails never stop coming through. There's markets where, say, $2 to $4 million here in Sydney, you get some great properties for that, which are selling cheaper today than what they were 5 years ago. They are out there. There's markets in all over Victoria. There's markets that are, in different states around the country, which are cheaper than what they've been. If you look at most areas, $1.2, $1.4 million markets, they are very, very hot in the current climate, and I expect them to be much hotter because you've now just, if you think about it, the cost of someone getting into a $1.4 million house, let's say that you've got two incomes that are on, I don't know, 100 grand a year in a household, they can afford, say, a $1.4 million purchase. The $1.4 million purchase, 20% deposit, you'd require $280,000 plus stamp duty, so 350 grand, just roughly, right? 350 grand. However, now, if you're a first home buyer, and the first home buyers can be someone that was born here or someone that's migrated here only 5 years ago or whatever, right? First home buyer comes into the market for a $1.4 million house. They need the income still, that's fine. However, they only need a 5% deposit. 5% deposit of 1.4 is 70 grand. You don't need 350 grand to get into it. 70 grand is all you require. So there's a lot of people that can get access to 70 grand that couldn't get access to, you know, to $350,000 beforehand. So that effect, right? There's more people. People may only have 20 grand, right? 20 grand is a 5% deposit on a $400,000 purchase. So what I'm realizing is that all the stock that we've picked up cheaper is being inflated a lot higher than the stock that we bought at $1 million, right? Because there's more people at that bottom end. There's more people that can afford it. There's more people to afford a Big Mac meal than there is to go and find, you know, a fine dining restaurant out there by the lake outside, right? And that's something that, you know, whether it's the 50-year mortgage, right? That's going to add more power to that market exploding. Albo adding in mortgages with a 5% deposit is going to add power to those markets exploding. My concern, I have two concerns. One, a business concern is that people wanting to build a 20, 30 property portfolio will become harder and harder and harder to obtain over the next few years, because inflation, you know, if you have, let's say we go back in a time machine 3 years ago, and I can go and buy you every second, like 90% of the properties that I'd buy would be under 250 grand prior, and now I'd say 70% of it would be under 350, right? To get under 200, I was picking up 60, 70% before. Now I might get 20% under 200 grand. And on 200 grand, you could have bought 6 properties for 1.2 million bucks. 6 properties for 1.2 million bucks, renting for like 400 bucks a week. 6 fours are 24, 2,400 a week, 120 grand a year. Now the prices are 400 grand as an entry price. For the same $1.2 million, you're only going to get 3 properties into the portfolio. Those 3 properties will rent for 400 bucks a week. That means you're only getting 1,200 bucks a weekend, or 60 grand a year. So the dynamics are getting shifted very, very rapidly as we enter into this new phase of, you know, expansion of monetary supply. And everyone will sit there and say, I got the best property, I got this, I'm the hero, whatever it is, without acknowledging that it was all these criminals that printed all this capital and liquidity and put in the system. And I'm excited by it. The sad part is that it's going to be harder for people to get ahead. There's going to be a lot more pain on there. People are going to be more enslaved by the system, but no one's going to change it, so it doesn't matter, right? We don't have the control over it. People accept it, and it's a fate that we're dealt. So how do you sit at the table and play? How do you view the story, and how do you partake in it? So on the back of that, one thing I didn't talk about, you know, today, like we've got rising debt levels. I'm going to be very cautious of what I say on this video about what I'm about to talk about, because 2 weeks ago, or maybe a week and a half ago, after our last Facebook Live, Macquarie Bank came out and changed trust lending, which I find humorous. They cited that it was social media posts talking about these sorts of things. And I guess they're aware of all the people out there pumping. It's a scary thing out there, right? There's all these people giving advice on TikTok and all that, that are saying, go and, you know, set up a trust, buy a property, get your accountant to sign a letter, say it's neutral cash flow, and then come back and buy another property inside the trust, and go on the merry-go-round again. And the scary part is that, you know, it just boggles me that people look at it and trust that, you know, oh, this person's told me to go buy it under a trust, and they go out and do it without looking holistically at their whole position, and do you need the trust, um, without realizing that their tax credits are trapped within the um, trust that they set up, or the vehicle. So I said on a podcast about 3 months ago that it was a Ponzi scheme, and it's going to stop, and there's going to be a loophole that closes in. And I think that, that was the nail in the coffin about 2 weeks ago when they acknowledged that and they closed it. How does it affect me? Um, sorry, just seeing the emails pop through. Um, yeah, it doesn't change our life, right? Because how we view and structure a portfolio is we want to look at the cash flow. That's the real thing, right? The cash flow that comes in every week in, week out. If you have to deal with an understack up like that, you don't need to go and hide it. It's more beneficial to put the property, without giving any financial advice, without giving strategy advice on a crazy dude talking about property investing on a Facebook channel. Um, the You don't need it, right? I'd say out of my investors with 20 properties in their portfolio, there would be, you know, 10% that would have the trust structure working in in their life at all with any properties under the trust, where 90% don't even have a trust, right? So it's interesting that you need to be conscious of policy changes out there. So we've got two things happening here now. We've got, Albo's first home in a grant thing happening. We've got rates dropping. We've got quantitative tightening ending. We've got quantitative easing playing up. We've got policy changes within lending institutions, which is negative on that. It'll change. It'll put a shift in there, but it will push people into certain property markets, which will create more heat and more pressure and a bigger takeoff, right? So interesting times. That's just something I thought of to throw in there about that trust situation. Um, I think, and I always try to research as much as I can around the hyperinflation scenario, because we are on the edge of it, right? We're on the eve of it, and anyone that thinks that we're not doesn't understand or doesn't want to listen. It's like saying, I don't want to hear about it, right? You need to hear about it, and you need to understand it. You need to see how you can, um, you know, play the game to win. And in history, his story, the eye of the victor, the winners out of any market which goes through a high inflation, understands the crucial points of how that debt works, what levels of debt they can take on, not to over leverage like those companies that have gone bankrupt in administration, not to load up on the wrong assets, protect the cash flow, which is crucial at all points, and have the right level of cash flow coming through to support the beast that's being built behind it. So it is a fine art. And I guess, there's going to be so many people in the next 12 months, 24 months, so excited. I've just got my first home, just got into a dream property, just got myself a unit for $1 million in a capital city, and not realizing that they've just signed themselves up for a life of debt and slavery to that debt, which, you know, yeah, I have I have concerns for how high this market can go. And don't get me wrong, I see someone here that just made a post about a question or comment beforehand, um, and I was chatting to him the other day about a property that was like 150 grand and sold for 500 grand, and it was in Logan area, right? Say Brisbane, right? Little two-bedroom unit, and $500,000. Who would have thought 5 years ago these properties are selling for that price? And could it stay at $500,000? Could it go to $1 million? Right? Someone's spending $500,000, right? Someone's spending 120 grand for a Ford Ute, right? It's a lot of money for the value that you're getting. Um, there's opportunities out there still to be had. If someone was starting out as a first home buyer today, and they go, I can buy $1 million property. All I need is only my $20,000 or my $40,000 to get me into an $900,000 property. Yes, you can go get $1 million property if you want. Go get an $800,000 property. But is that the best thing that you should be doing? Just because you can go do it doesn't mean that you should do it, right? We're all free to do whatever we want, right? We can all turn into crazies and, take guns out into the streets, right? Does that mean that we should? And does it mean that the outcome would be good for any of us that are going to do that? So, the banking system, the central banks, the policies have armed everyone with the ability to pull triggers. Those triggers, um, you know, aren't the best move that it should be making. So if I had a kid that's 20, or I was giving advice to a kid that was 20 today, getting their first property, whatever, it wouldn't be getting yourself $1 million mortgage. It wouldn't be taking advantage of the first home buyer scheme. I would be scared of taking the first home buyer scheme. It doesn't mean that it's a bad thing to go do that. Absolutely not. But I would be concerned. I'd be thinking, okay, how could I be getting the best move on the chessboard with the pieces that I'm given? And the best move would be buying the stuff where you can't even really find it for 200 grand anymore, but finding the stuff for 200 grand and making that small move. 200 grand property, if someone used their 5% deposit, that means you need 10 grand, right? 10 grand. I don't even know if they make credit cards smaller than 5 or 10 grand. Right? I'm not saying get a credit card, go buy your first house, but I'm just illustrating that it doesn't take much to get into, into a property today, and that's the smaller end, the risk, removing the risk out of the equation, because we are in a debt-fueled system. How high will this go? I have got no idea. I'm sure it will go much higher, right? The quality of life, the choices, the pressures, the headlocks that people will be placed in as they rise so high, that is a scary fact. And that's something that, yeah, take due diligence when doing that. But is it something to fear? Like, the heading was fear the market, or use it to your advantage, right? I fear, but I make moves. I was fearful of the market in 2003. I was fearful of the market in 2010. I've been fearful of the market every year since I've been buying, because I analyze that data that's out there, coming from the central banks, coming from the financial institutions around the world, coming from the government's policies that they're putting in place. So, yeah, what a exciting time to be alive. On that note, folks, I can see you guys leaving comments here. I'm going to go through the comments. If you have any questions, comments, thoughts, let's go through them, and go from there. Hey, keep increasing those hooks in the ocean. There's many assets, right? I said last year I wanted to buy 100 properties this year. I haven't bought 100 properties yet. I've bought a lot of properties this year. I've bought dozens of properties, and I'm happy with my moves. The properties I've been buying this year personally myself, you see me post up about motels over the years and acreages and stuff like that. Stuff I bought this year were just very basic, fundamental properties. Apart from maybe a half dozen offices that I bought, the rest of them are all 200 grand little shitty properties renting for $300 a week. High cash flow, good growth, good upside, good below market value, good inbuilt equity. Just because the value that's underlaying them, you can't build them for those prices. So it's not just, as the market goes up, it doesn't go up linear. I was talking to one of my nieces tonight. She's got a property and looking at upgrading the size, and I was like, in Sydney where we are, you can sell the property you're currently in, which is a very hot market for first time buyers and all that. But there's other areas which have not had the same provisions to allow them to grow because of certain policies didn't send them to the moon. And that move for her, I was like, that move to go from the first home buyer house that you're in to the better one, make a sideward step, get a certain property that I was sort of like property type that I was suggesting, means that just because the market's hot, it's not hot across a whole market. It doesn't matter because it's Sydney or Brisbane or Perth or whatever. There's pockets that are hot and there's pockets that aren't as hot, and that's where the opportunities lay inside there. So that's my 2 cents. So many property investors complaining about inflation, but inflation is actually helping them. It's not bad for property investors. Many don't realise how it works. You can't teach everyone, right? Like, understanding the game. Like, you don't see a top athlete playing fucking soccer, right? I don't play sport, right? Also, I wouldn't know what happens on a field, right? I wouldn't know what happens in a baseball ring or whatever, right? Who is successful in their game of sport without understanding the platform that they're playing in? There's so many investors out there that are buying, and they're buying on hope or thoughts or a bit of luck, right? But without understanding or taking the time to realize the real um, drivers in that sort of market. So yeah, it's crazy. Brendan, I hope you're doing well, mate. Birchie, what do you think about the it's a very controversial topic here. I'll read it out. Birchie, what do you think about the Aboriginals? Can we call Aboriginals anymore? Claiming Melbourne land area recently. Would this possibly lead to taking private property eventually? Seems to be happening in Canada already. I was on. Next question is about real commercial real estate. I was on Real Commercial a little while ago, just checking out some things like maybe like 3-4 months ago, just buying some stuff on there as you do. And I noticed the map, right, the Google Earth map where they have the map thing, and it had these boxes. It had these like check it out boxes, little squares all over the map, and they were reclaimed land for native First Nations, whatever we need to call Aboriginals today, as you would comment there. Um, and it was like maybe a third of the continent that we live on has been taken, right? And we think we own it. We, were asked to vote on a topic 2 years ago. Do you want to give the land back or whatever, right? The yes vote. And people voted no. But then the states went and did it anyway. So it's the illusion of choice that you have. I don't know the ins and outs of it, right? But what I know is that if you have a small pool of something, it's easier to control the small pool than what it is the bigger pool. So if you can control the small pool and send the Trojan horse inside a controllable pool for a common goal, but once you're in there, you can do whatever you want. That's where constitution could change from inside a policy. So how could a corporation change a constitution when you send the Trojan horse in? So I don't know. I don't have all the answers for it. Whose land was what, right? Um, the world that we live in is not the world that we die in, hopefully, right? Because it means you've had a long life, right? And things will change all around us. Is realizing the opportunities in any of those cycles. I don't believe it's good. I don't understand all of it, right? That's the fact of it. But very interesting. I look at when they change policy and like who's got their hand there forcing a signature on pushing the buttons to make that occur, and that's a big concern. So that's my feedback. Jay says thoughts on buying commercial property. I fear small businesses will struggle and entrepreneurs will be more hesitant to start business. Possible grants will come in to perfect the excuse to print. Would love your thoughts. Jay, look, I own heaps of commercial properties. I don't recommend commercial properties to everyone because commercial properties, once you build a foundation portfolio of nice, solid, liquid residential properties, mess around in that space, right? I get better returns from residential properties than what I ever do with commercial. I own I own a lot of commercial actually. I own shopping centres. I have infrastructure that I lease to ASX companies, some of the top companies in the world, multinationals, um, all different types of commercial property. My favourite property is I leased it to one of the largest telecommunication networks in the country. I bought it. It was vacant for 11 years. I paid 465 grand for it. I rent it for 100 grand a year on a 20-year lease, and it just keeps rolling over. They pay me a year in advance. It goes up with CPI. Um, the property's worth like maybe 2.5, 3 million bucks. So it's pretty cool. But if you notice the words of what I said there, it was vacant. It was an old Video Easy store, and it was vacant for 11 years. Imagine being the poor bastard that owned it for 11 years. It was vacant. I owned it for 2 of those years vacant, just trying to find a tenant. And I found this tenant by chance, right? One of my mates, real estate agent, found it for me. So I got a lot of love for him for getting that tenant for me. Um, Out of like the 6 or 7 um, commercial properties I bought this year, they've all been vacant for 5, 6, 7 years. I've gone in there to do aggressive negotiations, right? The deals haven't been done, you know, of love and been like, oh yeah, I really love your property, right? It's like, hey, this is the fucking terms. This is going to happen. And the terms, if you put the terms, I'm not going to go into the terms of how I do my deals, but if you went to residential tenants, a residential house, and said, hey, here's 50 grand, get out of your house, I'll pay you the rest in 5 years, they wouldn't really like it, right? You're never going to get it. So the reason why they do it is because they're desperate, because so many commercial people do their ass. So there is, a lot of people talking about commercial property out there. Yes, there's people making their money out of commercial, but the commercial is based on the business in most instances, and the businesses are topsy turvy. So for me to go and buy an A grade tenant on a good lease or whatever, I just think it's high risk, because once that tenant's, um, you know, been, used out of that premises, if they survive the tenure of their premises, the property could lose a good position of its value as well. So just think about every time you've seen a commercial property. I've got one at the moment, and I'm glad you asked that, because I'm going to text a real estate agent for an office, just random. I just buy offices for my business. I feel like I build businesses because I buy these commercial properties, right? I'm just like, okay, we're going to expand a business, put another one over here, right? Because I've got a cheap commercial property, and someone's given me stupid terms, and I've got the better of them. Problem is that that'll most likely be someone that has gone and bought a commercial. Their house, someone has bought a commercial property. So my thoughts on them: do they make? You can sit there and go, oh, the tenant pays for the outgoings, the tenants pay for these. Yeah, cool, right? If you've got a tenant, if your tenant survives, what's the stats of business? Like 90% of businesses fail in the first 5 years or something, right? You have a business that grows, right? I've had to move office to office to office with different levels of growth and expansion and consolidation over the years, from things that have gone great and things that haven't gone so great. And for you to have that tenant to be in there for the long term, very minimal, very minimal. So the risk doesn't outweigh. I know if my residential property comes vacant, it's great. Fucking move out, tenant. I'll put a new one in. They're bringing in 500,000 new tenants for me a year, right? Just think about it. Think about that. They're bringing 500,000 tenants a year for me in my residential property every year. Supply and demand issue. They can make 100,000 with short a few 100,000 every year. It just keeps piling up. There's never ending supply, right? I want the tenant to move out so I get a new one with a high rent. Um, so when I look at a commercial property, I can't say the same confidence in there. So maybe that gives a different perspective. And I haven't said I don't like them. I just say that be cautious with that. 5% deposit, isn't the government your partner in that? No. So no. So there's the government-owned equity scheme where the government, you put down a 5%, the government puts in 15%, and then you take an 80% loan, and the government has a 15% stake, and they're your business partner for life, right? This new policy out there is for any first home buyer. They can put down a 5% deposit, and generally you'll have to pay the bank lender's mortgage insurance if you take out 15% extra, right? So instead of putting down 20%, you put down 5, you have to pay the bank, 10, 20, 30 grand in lender's mortgage insurance. What the government is doing is that they are paying the mortgage insurance for you and backing the mortgage insurance scheme. So yeah, it's just a bigger Ponzi scheme on top of another Ponzi scheme, which is pretty crazy. Luke says here, hey Birchie, I have to do a minor reno after a long-term tenant is moving out in Melbourne. Is there a rule of thumb of capital spend? What are the best areas to prioritise? Luke, send me a message about that, what you need to do in there, what's recommended. I'll give you my feedback on that on a personal level. With the best bang for buck, yeah, let's say you've got a, I don't know if it's a house or a unit or what we're talking about there, but if you've got a property which, kitchens add a lot of value, be diligent when you're doing a reno. Paint and carpet's like, the basics, right? Depending on the market, do you put carpet, do you put tiles? How do you structure your reno? A paint, let's say you've got a 2-bedroom unit, for example. 2-bedroom unit, maybe 3 grand to paint the place. Carpet might be 3 grand to put carpet in. But if I'm going to do that, I'm like, well, the kitchen, whilst you've got the tenant out, whilst you've got the vacant property, you've got the skip bin there, may as well throw the shitty odd bits of kitchen cupboard out and put new kitchen cupboards in. Do you go and spend, 40 grand on a kitchen? No. You can go to Bunnings, you can get a caboodle kitchen. Might cost you 3 grand for the kitchen cupboards. Just go basic, right? Basic. And then, so 3 grand and install, maybe 2 grand to install it. So you got 5 grand for a kitchen. You got the tiler in there, you do the tiling of the bathroom. For me, I think a bathroom, if you can get in and out of a bathroom, smashing out the bathroom, putting in a new bathroom for 10 grand, that's pretty good. You don't go and call up, hey, AAA top bathrooms, come and do my bathroom for me. You find yourself a tiler, you say, hey, this is the task at hand, I need to do the strip it out, put a new one in, here's your labour for that. By the way, here's your tiles coming up. So you manage the project. If you're doing a 20 grand reno on a property and you can get an extra, $100 a week, that's 5 grand a year on a 20 grand investment. That's a 25% cash on cash return. And if you can go and revalue the property and pull out 50 grand, then you're getting 200% of your capital back out. So yeah, with it, I'm mindful of getting a return. If you're going to be spending 20 grand on a property and you get $5 a week rent or $10 a week rent, if you're going to spend 50 grand on a property and it's a deposit for another property, I'd rather collect the new asset because that's going to get inflated away and come back and do the full reno later, that thing. So, if I can patch a reno until I'm going to do the full reno, that's what I'll do. That's just my personal view. Luke just said it's a 4-bedroom house. Maybe send me an email or a text just with the maybe the address of it, or a link if you've got realestate.com link, an old one, so I can see what the photos look like and what you're thinking of doing with the reno and how much you're thinking of spending, what your budget is, and I'll give you some feedback on what I would do if it was my property. Matt says, I like what you shared in your recent podcast about the kid finally beat his grandmother at Monopoly, and when you finish it all goes back in the box. I think it was George Carlson that said that, right? And for those that may be listening and hadn't heard the podcast, it was this kid. He kept playing Monopoly with his grandma. His grandma always win. He learned how to play the game of Monopoly, and he won one day, and he's excited, and he's saying, "Nan, I won. I kicked your ass. Let's go again." Won, kept winning, and knew how to win. And then at the end of the day, he'd won all these times, and the grandmother said, "All right, it's time now. You go to bed. It's got to all go back in the box." It's the story of it, right? You can go chasing all the things on the chessboard, right? But at the end of the day, we'll all go back in the box. Things disappear. and they're no longer yours. And you need to put it in perspective of what you're buying for, what the goal is, what the purpose of what you're doing is, I guess, as well. So, um, I see people. I've got investors that I helped out for the last 20 years, and those investors have collected, 10 properties, 20 properties, whatever. They've gone from 200 grand to $1 million, but they're still working, right? And that's cool, right? It gives them comfort and all that. But it's like, okay, how do we turn that portfolio? Bought you 10 properties in the Gold Coast for 200 grand a piece. Now they're worth 800, 900 grand. Do you just keep them? Do you retire? Do you sell them off? Right? People think some people go and sell them off, but they don't take the time to understand about the inflation. Right? They go, the money never existed anyway. So yeah, make sure that the asset is getting you to where you need to be. So that's where you came from. Um, Jonathan, how do you deal with having so many low end tenants? Would there be so many issues and damage not having money to pay rent? It sound that way. Some of my best tenants have been in the property for 20 years. They've been paying $200 a week for many years. I buy it, I inherit the tenant, I adjust the rent, I get them in. They're happy. Like, they don't sit there and think, oh, okay, I've got tenants that are in, Vaucluse or wherever, and they're, paying $1,000 a week rent, and they're paying the ass. Right? I'm not saying everyone from Vaucluse is, but I've had houses which are $1,000 a week rent. I've got high end properties. Like, I don't just have shit properties. Some of my properties are like 2 grand a week in rent. Um, I've had terrible tenants in some of them, and I've had beautiful tenants in the low end stock. That's a that is a self-limiting belief of thinking that that's what the tenant is that you're going to get. So it's just, yeah, if you have your policies in place, you have landlord insurance and all the insurances in place, you have a good property manager, things go wrong no matter what, right? If you have a business, you'll have issues with staff, with clients, with whatever that happens. Is how you manage it, the processes that you put in place, and the minimization to make sure the quality is there. So yeah, property management, like I have property management business all around the country. It's a very thankless business and a thankless job to have. But when you look at the um, you know the industry, doesn't matter whether you're dealing the top end or the bottom end. There's a lot of problems out there. So yeah, it's having good management, having good processes, having good insurance policies, and holding the tenants accountable if you can get good tenants out there. And there's a lot of great tenants out there in the world that just are happy to have a roof over their head and have stability and all that sort of stuff. So yeah, I wouldn't say that's the case. Jay says here, what's the end result? After all the circus, do you think a global reset is possible? Very interesting times, I believe. The smart ones will keep the assets, but I fear the pressure that they are going to apply might make most crumble and sell. Well, they could screw everybody multiple ways. There will always be, if they took everything and you own nothing and be happy, right? Someone's got to own everything. How are they going to take everything? Um, yeah. Let's see another question. I'll come back to your $2,000 kitchen at Bunnings. Um, yeah, so I personally believe that it will get a lot tougher. Everyone will be squeezed out from hyperinflation, and it will happen via hyperinflation and end up being in a central bank digital currency with a digital ID somewhere in the future. And it might sound conspiratorial. Um, However, everything we've been talking about is getting closer and closer to that line over the last decade talking about it. So interesting, interesting in times. And I think a lot of people will get pressured into like, anyone that sells a property, I don't see people calling me up 10 years later going, oh, I'm so happy I sold a property. They're like, shit, I shouldn't have sold it. I should have bought more. Whatever the case is, it's just because the system is designed that way. And we're all just playing at the table of the game of Monopoly. Um, uh, Love your work and appreciate you a lot. Thank you, Jay. I appreciate that. The question is here: are the $1,000 Bunnings kitchens good? The $1,000 Bunnings kitchen, they are a thing called a Practa. The brand is called Practa, Practa. And if you Google Bunnings Practa straight line kitchen, it'll come up. It's now $869. Um, $869. They used to be $629, and then went to $679, and went to $699, and $729, and $769, and $798 or something. They're $829, and now they're $869. I was looking at them today, and I sent one to one of my investors and said, "Hey, this is what you need to chuck into your property. It's a piece of shit property, it's a piece of shit kitchen, and it'll do the job that you need it to do." So, what are my thoughts on that? I love them. I have loved them for a very long time. Um, I actually, I still use them occasionally. Just like if the place looked like a prison cell, I'd be chucking that in there, right? But if the place was decent and I can get a bit extra rent for having a bit of, you know, spicy looking, labour is going up at such a great rate now. So you got to look at the total cost, right? You put a kitchen in for $1,000, and it looks like $1,000 kitchen. It's new, it's serviceable, it's good, whatever. Very affordable. But then you got to spend 2 grand, 3 grand on labour. Then you got to hook the plumbing in. You got the sink. You got the tiles. You got whatever. But then, if you can go and get the caboodle kitchen, which has gloss 2-pack enamel doors on it, for maybe 3 grand or 2.5 grand, well then it's only an extra $1,000. It doesn't add value to. It doesn't cost you any more to tile. It doesn't cost you any more to install it. It doesn't cost you any more for that. So the finished cost might be the difference between 6 grand or 8 grand. I'd rather spend the extra 2 grand to get the nicer one in 80% of the scenarios. So that is my view on it. And yeah. Brendan says, my mate had addicts in his Perth property who had trashed the place, and he had to get the cops to remove them and went through insurance to get it all fixed. Took about 12 months. Absolute nightmare. Things happen like that. Um, if you have good agent, good processes with an agent, good insurance with the agent, it should be covered and it should be out within 3 months or so. John says here, "Hey mate, I've been off the radar for a while. Bought a house in Bali. Hope you're doing well, John. Hope you're doing well. Did you finish the hotel in the Blue Mountains?" Look, I've had so much stuff going on the last few years. That is my project, which is like the project that keeps on giving, not in a good way. Just too much going on. That place is nearly finished. It just needs to have cabinetry put in, like the cupboards, built-in robes, stuff like that. That is very soon. I always say 3 months it'll be ready. But I should go out there and give a video. The electrical's been done, the painting's all done, the flooring's all done, obviously. The new doors have gone in. It's just finishing touches. I'd say it'd be about 85% complete at the moment. George says here, looking forward to retirement the next 2 to 3 years after talking to you last week with those units we discussed. Yeah. Text me later. Have you spoken to Sumit like we discussed? As the next step, I'm curious to make sure that we stick to that plan. You're in a great spot. I'm really excited to see the goals that have been kicking and where we're at. Cool, guys. On that note, I appreciate you all tuning in for Tuesday night for an hour of your time. If you have any questions, flick us a message. Give us a buzz, 1300 367 925. If there's anything that we can help you with, we're always here. And it is coming up to Christmas. I was filming a podcast on this topic today. As it comes up time to Christmas, opportunities do exist a lot out there in the market. People are out there celebrating holidays, whatever, and there's less competition in the market. I love when there's less competition. Doesn't mean that someone's had a property for sale, doesn't want it sold still. They need to get it sold. Probably more pressure at the end of the year, but a lot of people go into holiday mode, and it gives us time for opportunity. So if you are one of my investors, if you're not an investor and you want to be an investor, reach out to my team. I think there's a link somewhere in the description here that's been pinned. Luke just asked, are you doing 12 days of Christmas? Let's do a 12-day of Christmas, right? 12-day of Christmas, I put up deals for 12 days before Christmas. Maybe we'll do the 20, I think it's like the 20 days of Christmas or whatever it is. But yeah, we'll do some deals before Christmas. But as December, January, I'm going to be at my beach house. I'm going to be chatting to a few of my clients over that period of time. I'll be reviewing your portfolios and whatnot, but I won't be as, active as, hey guys, blah, blah, blah. So if you are one of my investors, send me a text message, or speak to your investor relation manager in my office and say I want to be on the Christmas list. So if those deals come up, I'll send them to you, and we can do deals over Christmas. So on that note, thanks guys for watching, and we'll catch up soon. I'm off to the gym. See you guys. Bye for now.